The government plans to release a vision and strategy document for the financial sector to make it future ready. ET Now sources say that government plans to set up a committee for the same. My colleague Ankur Mishra is joining in with this exclusive. So Ankur, what kind of changes is the government really looking at as far as the financial sector is concerned? What are you picking up?
Yes, government is all set to bring vision as well as strategy document for financial sector. Now, I'm stressing on the fact that financial sector, it is not for banks, it is not only for NBFCs, but it will be a wholesome document for mutual fund, insurance and financial sector as a whole. Now, why this is brought? Because the aim is to bring the vision and the strategy for next 5 years. What has happened in past 3 to 4 years, this financial landscape has changed. There has been changes in the way depositors are approaching bank. There is a change how government is also looking to hive off a few of the stakes which they have, or the mergers and acquisitions. So all these issues under one vision document will be prepared so that the financial sector is prepared for next 5 years. Now this document will prepare sector in terms of size, capacity as well as skills. We also try to find out what has the work which has happened so far. We have been given to understand that there has been informal meetings which was conducted by government with the industry representatives, but we understand that there will be a committee which will be formed by the government, and after that this detailing of what could be there in the vision document we will see. But for sure there will be broad parameters which will be a guiding force for the financial sector for next 5 years.
All right. So, Ankur, thanks very much for gathering and getting us all of those details as far as the reforms that are needed in the financial sector is concerned. Of course, this is a source-based story. And Ankur, as was mentioning, that the government has already met. In fact, informal meetings have happened. And to discuss that further, I'm now joined by Raman Agarwal, the director of FIDC. Raman, thank you very much for joining us this evening. Now, my colleague Ankur was stating that sources say that the government is looking to bring in a vision document so that the financial sector is keeping up with the times and, of course, is resilient at least for the next 5 years. In your opinion, what kind of changes are really needed, and and basis the information that my colleague was sharing, what kind of issues will be resolved with this document basis the information that Ankur shared?
Thank you for having me on the show. See, yesterday, Honorable Finance Minister made a very important announcement as part of the priority number 9 on her list, which was the next generation reforms. And she said that for meeting the financing needs of the economy, the government will come out with a financial sector vision and strategy document. So it has two parts. One is the vision and other is the strategy. And it further goes on to say to prepare the sector in terms of size, capacity, and skills. So, it gains a lot of importance. So let's understand, as your report just also mentioned, a lot of things have happened in the financial sector of late. We've seen some new entrants by way of fintech players coming in, and they are working in tandem with a lot of existing players like banks and NBFCs. Then we have, on the other hand, we are seeing a lot of spurt in the demand for credit. Then we also see, on the other hand, the regulator talking about setting up of self-regulatory organizations, that is SROs, to further ensure and bring much more discipline, which we've also seen of late, some of the financial sector players being penalized or actions have been taken against them by the regulator. So all in all put together, I think this is a very apt move, a very need of the hour move by the government, because it is important to understand that next 5 years, where do we see the whole sector playing? And more importantly, the roles which the various players will play. So for example, when you talk of financial sector, of course, you have the scheduled commercial banks at the top. Then you have small finance banks, you have cooperative banks. Then you have NBFCs, you have MFIs, you have insurance companies, you have asset management companies. So all these sectors today, all these companies are working in a very interconnected manner. And there are also concerns relating to contagion effects, carrying of the weakness of one to the other. Then there is also concern about the dependence on funding of one sector or the other. For example, RBI has been voicing concerns of over dependence on NBFCs, on the banks, and we in the NBFC sector have also been demanding to give us an independent refinance window. So a lot of changes are required because of the huge, as the economy grows, as we aim towards becoming the third largest economy in the world, as we become the fastest growing economy in the world, the credit, the asset management, the insurance, all become such complicated and interconnected web that it is very important that at the apex level,
Right.
at the policymakers level, there needs to be
Right.
a vision document, and that will be followed by working out the strategy, how to go about it. So I think this will have a very multi-dimensional approach, wherein,
Yes, in
and I
fact,
think as the
Mr.
report you have said,
Agarwal, the
yeah.
CA of the country, V. Anantha Nageswaran, was also. Yes, yes.
Yeah,
So the
please go ahead.
CEO of the
Please.
country, V. Anantha Nageswaran, was also mentioning while presenting the economic survey that this is now time for the next phase of reforms as far as the markets are concerned. Also one part of the financial sector. India is now the 5th largest stock market in the world. And we've seen a lot of retail participation coming in the past few years. And of course, protecting investor interest to avoid over-financialization of the economy is going to be key. At this point, what changes are really suggested? What are the changes that you sort of suggest and you think need to be brought about to safeguard retail investors and new investors who are coming into the market?
See, basically, what we need to ensure is that whatever investment happens in the market should be way by often, a well-studied and educated lot coming in. When I say educated, I'm not meaning illiterate people coming in, but what I really mean is people who understand the nuances of the market. Today, we see a lot of, pardon me for saying this, Gen Z, the younger generation, getting lured by the kind of heavy returns which the capital market is able to give them, and some of them are making imprudent investments. And we saw the concerns in the F&O market also. So not all of them are well informed. It's primarily based on a word of mouth or what we informally call as tips being given from here and there. So it is important that discipline is brought in the sector. It is important to ensure that people are well informed and well educated before they invest their hard-earned money, and not see lose money overnight or you see quantum jumps, because let's understand that at the end of the day, we have to make wise and long-term investments and not run for short-term gains. So that is a very important, informed and
Absolutely,
educated
absolutely,
lot. That
Mr.
is
Agarwal.
important.
So educating and spreading awareness is one side of the story, but the other side, and as you also brought that up, was regulation. We already have FSDC as the common platform for the sector, but at this point, do we really need new regulations? And how will those really be fruitful for the financial markets?
Regulation does not mean bringing in new regulations. Sometimes it could be repackaging the existing regulatory framework. As I said, there is a lot of interconnectedness happening. So, for example, let's talk of the credit side. You today have banks and NBFCs working in tandem. You have a model of co-lending on one hand, then you have a model of on-lending where banks lend to NBFCs or on-lending to the retail segment. Then there was a recent concern raised about the certain spurt in the personal loans unsecured, and RBI had to come up with increasing the risk weights. So, as I said, it's a very vast segment, a very multi-dimensional approach. One, as we said, educated, informal, fine, regulatory informed. See, today RBI is also working towards harmonizing the regulations for various sector players. Now, while harmonization may be fine, then we also need to ensure that the typical business model of every sector needs to be retained and nurtured and grown. So that is also a
Right,
very important element. So I think FSDC is a
right,
very,
right.
touches upon very few parts. It's like the way I look at it is FSDC is basically bringing in coordination in
Okay,
working of the various sectoral regulators. Here we are talking of not only regulation. Regulation is just one part. We are talking of
okay.
vision. We are talking on the way the government perceives which sector, what kind of role each one is to play, how the interconnectedness needs to be addressed, how there needs to be a model of self-regulation brought in. So I think it's
Right.
important that such a document was, I think it was very much need of
Right,
the hour.
and
I
it'll
must
be interesting to see how the model of self-regulatory organizations really comes in, and as you mentioned that there are fintechs, and of course there is a proposal for bringing in an SRO as far as that sector is concerned. But let me take off from that point, Mr. Agarwal. There's also a mention of technology in the proposed plan. Now, there are new advancements that are happening in tech. AI is coming in. How, in your opinion, can the financial sector leverage new age technology to really enhance efficiencies and reduce costs?
That already we are seeing some excellent work being done. As I said, some of the fintech players coming have done some excellent work, and technology is now being used extensively. So, for example, if you look at the highly sensitive area of MSME lending, today we are moving into an era from the asset-backed lending or collateral-based lending to a model of cash flow-based lending, and that is purely possible because of the technology coming in. You have the GST data, for example. GSTN has been appointed as the account aggregator. That means every lending institution has access to GST data, which gives the most authentic cash flow information about any business entity. So then you have technology being used for doing the KYC, technology being used to do bringing in efficiency, checking frauds. So all this is happening. So technology has a huge role going ahead, and we also need to ensure that, on the other hand, a lot of cyber security, cyber frauds related issues are also
Interesting
coming
to see. It will be interesting to see, Mr. Agarwal.
Yeah.
Right. Right. And there are too many advancements that are happening in the space of technology. You have cybersecurity, data security, preserving data within the territory of a country. And of course, fintech, as you said rightly, is also an emerging sector. Will be interesting to see the new age reforms that are brought about by the government. But on that note, in the interest of time, Mr. Agarwal, we have to wrap this chat up here. But thanks very much for joining us this evening and discussing what these reforms could really mean for the sector.
If you like this video, then like, share and subscribe to ET Now.